there are so many more, I guess, headlines at the moment around the property market crashing and so on. But the feedback that we had from our client night a couple of weeks ago has been amazing around your explanation of the two different market cycles, top down and bottom up driven markets, how they're different, why they're different, where we've been previously and where we're looking over the next 3 to 5 years. So could you maybe just explain that for our viewers and the exciting part, I guess, of where we're at in the cycle right now?
Yeah, so we've just come through what we call a top-down market. And a top-down market can be great for making short-term profits, but it's also incredibly important to time it perfectly, because if you mistime a top-down market, you can be burned, to be honest. And so a top-down market is driven by essentially greed. So the top end of the market, when there's a lot of executives getting their bonuses, money's cheap and easy, it pulls the price up at the top. So they start bidding for the premium properties, of which there's very few. Yep. So they bid up the price, and then the second best properties start to look more attractive and so on, and that pulls the market up from the top. But as soon as you take away the thing that was driving their greed, the easy money, or the enthusiasm, the bonuses.
Endless positive sentiment,
yeah.
Right?
As soon as you take away that positive sentiment, that pressure pulling it up diminishes, and all of a sudden there's now fewer buyers for those properties, and the market at the top end dries up. And you start to see a settling of property values. And we're seeing that at the moment with the median house price in premium markets, and even into the middle kind of to upper echelon of the Melbourne, Sydney markets in particular. We're seeing the median drop down because just those premiums properties in each suburb aren't selling anymore.
We saw it instantly, didn't we? Like our viewers based in Melbourne might be familiar with a suburb called Toorak. If you're in Sydney, think of a Bondi or a Mossman equivalent, something like that. Very, very top end premium. Your point about it ending very quickly is spot on, because in the first 3 months after the first interest rate rise, we saw the Toorak median come back by 15%.
Yeah. Well, we saw it through the 2017 to 2019 slowdown, which was obviously driven by tighter lending criteria from APRA. And I'm pretty sure Toorak dropped by about 34% in that period of time. So obviously that comes back really hard in terms of the median house price. And then it balloons really quickly when there's that really positive sentiment and as I said, greed. Yeah. Now, bottom-up market is actually driven by need, opposite to greed. And the way to describe that is, obviously there's a certain amount of housing stock in Australia, and there's a certain number of people in Australia. So regardless how many properties go to auction this weekend, it doesn't change the volume of houses in Australia, right? The only thing that's going to change the number of houses is building more. And the population is set by the number of births, deaths, and net overseas arrivals. When the number of people exceeds the number of homes, and the number of households exceed the number of houses, then there's an undersupply of housing. That's a structural undersupply of housing. And we've seen that right across Australia right now. That's why the vacancy rate has dropped from 2 to 3% pre-COVID to 1% now. And in some cities, 0.5%. And there's, I think, it's 20% of the number of homes available going to market to rent right now as what was being put to market each week prior to COVID. So it's an 80% reduction in the properties going to or available to be rented on any given week.
One of our property, just sorry to interrupt you, but one of our property managers reached out to me yesterday. My lease is up for renewal early next year. There are 3 properties available for rent in a whole suburb.
Yeah. It's funny because one of the challenges we've got in property management right now is finding comparables, because nobody's prepared to leave their property because they're worried they won't get into a new one. Yeah. Hence the reason why rents are going up really quickly as well. So there's such a scarcity of that rental accommodation right now. That's proof in the pudding. There's an undersupply of housing around Australia. The only way to fix that undersupply is by either reducing the number of people coming into the country, and we know that's not really palatable for the government. Yep. There's a strong need for more workers, or by quickly increasing the volume of houses in the market. And you can't build a new house. You can't plan it, approve it, and build it in a day. There's a huge lead time for that, and we're underbuilding right now. In fact, the number of homes being built in 2021 was about 180,000. It's forecast to get down to 120,000 in 2023. And
it's getting worse.
It's getting worse, yeah. So bottom-up market. So we know that if there's an undersupply of housing, more people bidding for the affordable properties at the bottom end of the market, obviously they start to diminish, they dry up. So then they bid up the price on those affordable properties. So the next most affordable start to look cheap by comparison, and then people go, well, that's actually cheaper than I thought it was. It's not a big step to go from here to there, but I think the value is better. So then they start pouring into those properties and it pushes up the value. So that actually drives the prices from the bottom up and it pushes them all along. Now, where greed disappears really quickly, what do we say? Greed fades, but need stays. It's not going to turn around. These market cycles actually take 2 to 3 years, maybe even 4 years before anything will be done. I touched on the Million Homes Accord the government wants to do. Now, they actually acknowledge before 2024, not a single extra home is likely to be built from anything that they do. So there's 2 years where nothing's going to happen. We would argue that beyond that, we think that there's almost nothing going to happen anyway, because an accord's a great thing in principle, but to increase the number of homes, they have to rezone a lot of land. That needs to be advertised. It has to go through public scrutiny. That takes years. Then once it's all done, developers need to buy it or go through the design process to then get approvals. That takes another couple of years. Then they need to build it, a couple more years. So it's 5 to 6 years if you started today at a sprint to increase the number of houses in the market. So great sentiment. I think it's unlikely to happen. And so this bottom-up cycle, and we're seeing it because the first home buyer loan approvals is starting to swing. It's a little bit choppy at the moment, but we're seeing that starting to swing around. And why wouldn't they? They've got government support, first home buyer grant, first home loan guarantee scheme. There's now state government incentives to co-invest with first home buyers. And again, if you're thinking about whether there's any, whether the government believes in houses, you just have to go, well, how much are they prepared to invest in the housing market? That tells you a lot. So all these things are supporting first home buyers, and their rents are going up at a rate they've never seen. They're desperate to get into that market, and there's few affordable properties, so they're driving up that price from the bottom. Doesn't make it into the newspapers. You won't see it in the stats because it's being hidden by the top-down market that ended, and that settling of the median house price coming down from the top. But we're absolutely seeing at the bottom end, we're still price growth happening in affordable suburbs, and we're seeing the rental growth. So as a property investor, again, we have to be really careful. You're not investing in the entire market. You're investing in one house. And if if you're smart, you can get into the house that's going up in value, and you're getting a 1-2 year head start on those that sit out of the market, waiting until the median house price has stopped settling and go, oh, now must be the time to get back in. But they're really just catching on to that greed cycle that's driving from the top down, and keep in mind that catches the bottom last, whereas a bottom up is going to keep happening for the next couple of years. And that was always where I made money as an investor, getting into that bottom up, getting into the affordable end of the market, riding the price growth. And it's been a very steady 24 years of constant growth because of that bottom up approach.
You spot on. I was thinking as you were talking that there are so many similarities that I see now to where it was post GFC. Government motivation to regrow an economy, commitment to population growth, especially first home buyer incentives. It's great to be on the positive whirlwind when everyone's flying, right? And everyone's up and about. The smart investors make their money when the demand is less, and you buy at the right time in the market. As boring as it might be, based on the fundamentals. And that's why it's what we focus on. I bought a property in the middle of the GFC. My mates told me I was stupid, the world was going to end, etc. In the 18 months after that, prices were up over 30%. And the reason for that was something that we wrote about in Investing in the New Normal, the government's investment in the housing sector, specifically in construction, given it's a major employer, to mitigate unemployment impact and to regrow construction economy. Then that's really a key thing. So that's one thing that we want to really reinforce is leave emotion at the door. buy based on the fundamentals. And the fundamentals make a lot of sense right now. We talk to a lot of people with our team here at OpenCorp, and often people say to us, we'll wait 6 months until things have come back. The reality is that by the time you hear about things coming back, there's already opportunity that you've missed out on. That's why at OpenCorp we take the education side of things so seriously. Finding these opportunities is really tough. We've got a research and analytics team of 6 people. So if you're trying to do it after hours or on the weekend and you find that you're not getting very far and you think that you could use some professional help to do that, please reach out. We saw the market 2.5 years ago. We were talking to our clients about the opportunity despite the doom and gloom, and everyone that held a property through the last 2 to 2.5 years has made upwards of 200 grand. So if that sounds appealing and you'd love that in your portfolio, please reach out, get in touch. Matt, thanks again for joining us. We'll see you next time on Conversations with Matt.